Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching today. We're going to ask the question, is it over? Is this the end? And if it's not, what would constitute the end? What is the line in the sand? We talked yesterday about the levels that we didn't want to see lost. And we're now on the verge of possibly losing those levels. We have to see how the daily close is. But we're going to look at that and a whole bunch more. Smash the like button. This does help get this channel out to more people and does help, of course, support the channel. And also your comments. Thank you so much for those that take the time to write those. I take the time to read and respond. And those of you ask questions in the comment section, I do get back to those as soon as I'm able to. However, if you would like more immediate interaction and engage with me, you can find me in the Discords below. The Stocks with Josh Discord. Just click on just below to see the description. You might need to click on the More button. There are some links there for signing up for that. There's the Tribal Trades Discord there as well. Unfortunately, that's closed at the moment, but you can get on the wait list there. You'll just need to send an email to get on that wait list for when we do open again sometime this year. But the Dr. Josh Discord, I have my own Crown Traders channel there where I share education, insights, some resources on my trade setup, and of course, entertainment, because I'm not a financial advisor. This is not financial advice. This is for education and entertainment purposes only. Are you not entertained? Okay. And we will be doing some more trainings, live tradings in the Discord today, and we'll be doing some leverage tradings. Learn how to short the market with leverage. You can make money on the way down. Want to learn how? Join Discords, and I will teach you how to do that. A lot of people, even people who just picked this up in the last week, are posting many wins on this downtrend, making money by shorting the market and doing so hopefully responsibly and safely, because that's how I teach. Okay, so let's look at some things here. First of all, Montana, North Dakota, and Wyoming all rejected bills for their strategic Bitcoin reserves over volatility concerns, and look what happens the next day. Ouch. There are still, with a lot on the table, such as Utah, I think there are about 23 states considering, so it's just 3 that have decided against it. Will they regret that decision, or will it be a smart decision? We're going to wait and see. Of course, in 2021, we did see these kind of corrections. We saw that big 50% correction there, and of course, 30% correction, 25% correction. So there was certainly, this was a mid-cycle. It was just a correction. It was the sell in May and go away. Mid-April to mid-May, market crashed. Bitcoin went from 65 down to 28. Most alts just returned to bear market levels. Most did not recover. So for answering the first question, is this over? It's over for some altcoins. There are some altcoins that are never going to recover. That's it. It's over. Some of those coins will never, ever come back. They're just going to continue to go to zero, and that's it. Some altcoins are going to go to the bear market lows or very low, and they'll live, and there'll be a pulse. But in the new bull market, there's not going to be much to it there, and they might survive, but they'll never recover to the previous all-time high that they had in this bull run or the last bull run, depending on how old the coin is. That's number 2. And then only the strong will survive. There will be altcoins that I believe that will rebound from this. I do believe this is like the April and May drop. I don't believe that Bitcoin is going to lose 50%. However, we have to be prepared for whatever may play out, and I will put some crucial levels there for Bitcoin. And of course, we have to consider that it's possibility that we are now in a bear market, and this cycle has ended sooner. And the reasons why would be obviously the meme coin casino, so many scammers just coming in, flooding into the space and taking that liquidity. The Libra one, I think, took the most liquidity, like 4 billion market cap wiped out. All the exchanges and the market makers who are unregulated, doing unregulated kind of things and just liquidating people to the up and to the down. We do follow the yellow brick road for that reason, and people are losing money. That liquidity is gone and taken out, with no signs of rate cuts this year, no quantitative easing. Also, and with Doge, the Department of Government Efficiency coming in and stopping a lot of this wasteful and fraudulent government spending, we're now seeing a lot of that money not being in the markets. And, you know, I think people were using that, somebody was using that money to buy, I believe, and that money's no longer there. And maybe people are panic selling because they know Doge is coming for them if they have been doing things that they shouldn't have been doing. And so, okay, so we're looking at these kind of narratives and factors playing out, but there are some positive things on the horizon. Some of these altcoins still could get some ETFs. Also, the Bitcoin Strategic Reserve is not dead and buried. The US government, I think, will play out something there. We're not sure what. Many states like Texas and Florida are looking at voting in a strategic Bitcoin reserve there. That can be very bullish there. And MicroStrategy keeps buying. And so who is selling? Who is selling indeed there? Of course, the bullish scenario is a pullback to the 88 to 84K zone and a quick recovery. And maybe we're seeing that right now. We're going to look at the charts in a moment. However, Nick Crypto here thinks that possibly we could come all the way down to 71.6K. And that would be pretty brutal. Now, remember this, that the low of an election week in a halving year has never been lost. So if you go back to 2020, to 2016, 2012, those levels have never been returned to. That level right now is about 66,800. And so if we lose that level, we'd be doing something that has never been happened before and losing the low of an election week, which would be the low in November there. So that's very interesting thoughts there. And of course, just some perspective from 2011, Bitcoin down to 270 a pop. So glad I didn't buy in that mess. Is this guy still alive, but dead inside? And you do see that in the past 24 hours, there was a lot of traders liquidated, 1.3 billion. The largest single liquidation order occurred on Binance. Somebody got liquidated with 20 million. So that's 20 million that hasn't gone into the markets. And stocks aren't looking much better based on this here, number one in overvaluation across the board. And so you can see the different years. Are we about to have capitulation in the stock market as well? And I'll likely be doing a video on that, upcoming video on stocks. And so let's look at the charts and let's talk about what's going on. Now, here we have the 200 EMA on the daily. I do expect that now to get tagged if we don't reclaim this 90K level. And now we already have reclaimed 88. These are the areas that I gave you yesterday as the line in the sand to avoid further capitulation. And we have bounced back up two of them. That's bullish. That's been a fairly bullish bounce there so far. If we go to the 4-hour time frame, there we can see how we've this is a good stopping volume candle wick. So that's positive. So we actually need to wait and to see how this daily candle is going to close, if it's going to close below this and lose this level. Now, we haven't had this level even tested, let alone lost for some time, obviously in January, but I mean, we haven't seen it happen very often across the board. There was one there, what do we have here, in December, January. So it was tested at least once per month, but not very often is what I meant to say. And then November, it got tested. But you can see how here it broke through that $90,000 level and how important that was. You can even see how important this 88 level is here. And this was really where the parabolic area that we had, this big move up here from around 76 up to, that 88K region. So there is a big gap for this to fall, if this was to fall down to about 77. And so I got asked in the Discord today what would be my line in the sand, and that would probably be it. And let's measure that up. Obviously, we would have to lose the 80, 88, and 89 and close, have a daily close, a 3-day close, a weekly close there. The 200 EMA on the daily. Now, look, in the last April to May drop, we did lose the 200 EMA on the daily. That did get lost. And the 200-day moving average, which is different, it did get lost, but not really. It just kind of wiggled below it a little bit there. And then the one that I'm really focused on at the moment is the 50 EMA on the weekly. That there basically held the line. Yes, there was a couple of candles that kind of popped below it, but that held the line during the April to May 2021 drop. So the 50 EMA on the weekly time frame, which is sitting currently around at about 76,000 And we've got the Fibonacci level there at about 76 as well. Now, that doesn't mean that we couldn't come down and wick and hit 73 or even 71, but I wouldn't want to see a weekly close below that. Or if there was, I wouldn't want to see, there was a couple of little candles there back in April and May of 2021. So that would really be where people said, hey, when do you think the bull market is over? And look, if the 20 EMA is crossing below the 50 EMA on the weekly as well, it's probably over as well there at that point. So I would say yes, and then we're going quite likely into a bear market. Just remember, we could see some violent wicks below it. We might even see, but if we stay close to that and don't move away, if we would lose this and then drop below that and close under that 73 level, for example, then we're saying, okay, there's a struggle now. There's something going on. Remember, Bitcoin, its history never lost that November election week low. Let's look at the yellow brick road. So as far as what we can see is if the 20 EMA on the weekly, we need to get above that. That's crucial right there. And if we don't close back above that by the end of this week, and look, even you could say by the close of this month, and it's looking unlikely, but not impossible. We've seen Bitcoin make violent moves of 10,000 in one day before, and it's going to have to do that if it's going to get back above the January close of 102. So we really want to get above that January close of 102. It's going to be a stretch. It would be tough. It's going to take something significant, and the likelihood of that happening looks bleaker and bleaker by the day. Okay, but this 20 EMA on the weekly, that's a big level that we really need to get back above, and we need to get back at above very quickly. It's pretty close, and we are coming back up to it there. I did nibble a little bit and add a little bit more Bitcoin at these levels. Obviously, if we come down to the 200 EMA on the daily, I'll nibble a little bit more there. I'll nibble a little bit more there. And then obviously we'll see what happens at that $77,000 level if we do get down to that 50 EMA on the weekly time frame there, which will be up a little bit. You would expect it to be somewhere around here. I wouldn't expect it to stop there. If it got down to there, there could be a wick or something there that could pull up. Of course, we do have the tribal trades trend line slowly coming up as well. One line to rule them all, and that could provide a little bit of support. So let's look at the liquidation levels, and this is not going to be pretty. So obviously we see a lot to the upside. That's positive. The 48 hour, which I really, really like. Again, we could see a bounce come in here from 92 all the way up to 96. There's a lot of liquidity there. This is going to be a very interesting chart to keep an eye on. Again, the same thing from 92 all the way up to 97 on the 3-day. If we look at the weekly time frame there, again, we see the majority of the liquidity on all of these shorter term time frames. Now, if we move out to the more monthly time frames, we're still going to see a massive amount, 200 million, 90 million, 70 million, 162. There is a lot there at 100K. So I'd be shocked if the market makers left that behind. Of course, they could come back and get it in a month. They could come back and get it in the next couple of weeks there. And obviously, I put this drop starting January, around January 18th. So if we did go 2 months down, that would put us to mid-February. And then we might see the FOMs come in and save the day if the market is looking really bleak by then. Of course, it doesn't have to exactly repeat April to May, and then April, May, and then May to June, obviously. And so mid-June, so we went from mid-April to mid-June, it dumped, and then went sideways from mid-June to mid-July, or around that area of July. And so we could see something similar. If we were to repeat exactly, obviously, then in March we would pick up, and then maybe we pump through and have a green March and April, and then drop again in May to June, July, and then pump again July, August, September, and up there. If you think it's over, obviously that's not going to be the case there. It's over. If we look at the 3 months time frame, this is where it gets very interesting, because we've taken out a lot of this liquidity, and we have a lot up there at 110, like 300 million. So on the bigger time frames, I mean, we could really stretch out to 6 months here and see what we have. And there, where you get out 6 months, you do see there's a lot there. There's 3 billion at 81, just as an FYI. And there's 2.5 billion at 86. This is all the liquidity that got left behind. 409 million at 76. I mean, you could come all the way down 1.3 billion at 61, for example. So there is a lot of liquidity down here, 3.99 billion. Just because it's not all, you've got to put your cursor over it and see how much money there is accumulated to the downside there. Billions and billions and billions of dollars that can be collected by just nuking this market if you go out to the 6-month time frame there. So just be careful with your trading. Yes, we could be in a bear market. We could see Bitcoin capitulate to lower levels. We could see it come down to that 76, 75, 74, 73,000. We could even see it come down and wipe out all of this. This would be tough. We'd be doing something never before if we came down and tagged this level here at 66,000 there. But of course, we do have massive area there, 6.21 billion at 61. And just remember, in the last bull run, Bitcoin had never gone below its previous all-time high, which at the time was 18, and it went down all the way down to 15 in the bear market. And so, of course, last cycle's previous all-time high was, of course, 69K. And so we could see it go below that. And of course, if we did see it come all the way down to 61, we got 6.21 billion. And, you know, frighteningly enough, you could just keep going lower there, 57. And we could see that. Look, a 50% correction from 110 is going to be 55,000. And that would be in line with the April and May drop. It dropped around 50%, 65,000 down to 28 is actually more than 50%. And so that would see us come down to these levels. Yes, we would lose the low of the election week, which hasn't happened before, but we do see things happen before that we haven't seen in other cycles, such as we'd never seen an all-time high before a Bitcoin halving, and we saw that. So be prepared for anything. The big worry and concern for me will be this 50 EMA right here. I think if we lose that, then that could spell some trouble. But we'll cross that bridge when we get to it. Obviously, first of all, we have a lot of levels that have to be taken out. Obviously, these two here at 89 and 88 are crucial to hold. If we can hold those levels, close above one or both of those on the daily, even jump back above this $90,000 level would be absolutely huge, 90 and 91. But my feeling is now this could be resistance, and maybe this 90K level will become the new top of the range, and then we might trade down to the bottom of the range somewhere down here around 82, 81, 80. You see with the 200 simple day moving average there at 81, we could come down and we might trade between the 80 and 90, possibly maybe wick down to that 77 where that 50 EMA is on the weekly time frame. So that is a very real possibility. Like I said, if we cannot close above these levels, if we break down below them, if we get a monthly and a weekly close and we just can't break above there, that will create a new resistance, a new ceiling, and then we have to figure out where the new floor is going to be, because the floor is not going to be at the same place as the ceiling. And right now, this is the ceiling. We're trying to break back above into the range, back above this $90,000 level. Failure to do that, and there will be a new range created. You know, this could be the middle of the range there at the 200 EMA on the daily, and then the bottom of the range somewhere around here. And of course, we could wick down, like I said before, the 50 EMA in the weekly. I know that sounds a little bit bleak, and it's going to be way bleaker for altcoins. I have doing a ton of updates in the Discord, which levels I'd be looking to. People are asking for levels for altcoins. I'm sharing all that information in the Discord. So if you're not in the Discord, you can get signed up below in the description. You can have that engagement in there with the wonderful communities that are there. So until the next episode, or until I see you in the Discord, happy trading.